Mike, fantastic to get you on Real Vision finally.
So excited that I'm here. Thank you for the invitation.
So listen, first give people a little bit of background. We'll go through all of that and we'll go back in time before that, but just what you do now, because you do a bunch of things.
Indeed. Yes, it's been a busy month, but last 13 months, just a really exciting last few years, frankly. So over the past year and a half, I transitioned from running The Block, one of the leading media research and information businesses in the crypto space, to Paxos, where for the past year, I've been working as VP Stablecoin, running the stablecoin business for Paxos as it scales, third largest stablecoin issuer in the world, and was also during the past year while doing that, investing in Web3 companies, raised a small operator fund, $7.4 million called Sixth Man Ventures. We made more than 60 investments, average check size of $100,000 in two Web3 infrastructure and application companies. More recently, we raised our $125 million fund two for Six Man Ventures so we can invest at larger scale. There's just so many great companies, projects, entrepreneurs entering the space, existing in the space already and doing new things. And over the last couple of weeks, have founded with some other folks a really exciting project called LinksDAO, with a goal to basically create the world's greatest golf and leisure community, a mixture of an online community with membership and participation, as well as a real world initial physical facility where folks can join, play, enjoy themselves, and then hopefully over time build out a global network of those types of clubs.
And you still at Paxos now as well, or have you?
I'm an advisor to Paxos, yes, but not on a full-time basis. I know in crypto we all do many things, but at some point 3 full-time jobs just doesn't quite cut it.
I hear you, man. Listen, let's go back in time. Give me, how did you start this crazy journey, and then how the hell did you end up in crypto and decide to start a media business? There's a whole bunch there.
Yeah, so good question. So basically the first decade of my career, actually I was in media and entertainment. So I started at Disney, working in their corporate development, strategic planning group. So really got excited about working in broadcast, television and cable television early on, 2001, 2004. Worked at a startup in the media space, 2007 to 2009. Here in New York. I've been in the tech industry in New York for 15 plus years now. And then 2009 found myself at YouTube. So, selling ads for online music. So the first decade was all media. And then Google's great. In 2010, they allowed me, if you were performing well in an emerging platform, they would let you switch to another one. So I got to join the emergent Google Wallet team, which now is Google Pay, right? So now broadly, globally adopted. At the time, it was just an internal startup, and was able to switch from media entertainment to fintech at the advent of mobile payments. So I spent 3 years on that team. Was fortunate enough to meet some incredible entrepreneurs there, who later went on to Braintree Venmo, which was sort of before Stripe's time. It was the Stripe of the 06 to maybe 13 time period, and really exciting, making it easier to accept payments online. Customers like Uber and Airbnb worked with us. And so I got introduced to crypto then. We were going to add Bitcoin payments to the gateway. So if you took an Uber, if you booked an Airbnb, you could pay with Bitcoin.
What year was this?
This was 2013. And
wow.
So it was exciting. And, we had Braintree owned Venmo at this point. There were only about 30,000 monthly active users. And PayPal made a great spot. David Marcus was running it at the time, and he acquired Braintree for about $1 billion, a little bit less, and got Venmo with that. When PayPal acquired Braintree Venmo, they killed the plans at that time for Bitcoin payments in the apps. And I think it was the right call, given that today, for a host of reasons that we can talk about and we all know, high fees, low throughput, that hopefully changes with Lightning, but that's to be seen still 8 years later. It would have probably not been the right choice to have Bitcoin payments at that time, but I got excited about it. The promise of censorship resistant global instantaneous payments. And so I bought some Bitcoin in 2013 after meeting with the Coinbase team, after meeting with Balaji, who was at A16Z at the time, and working closely with the Coinbase team. So he, by talking 4 times faster than me and 4 times more intelligently, it was just like, oh my gosh, I've got to buy this stuff. Put it on the table for a bit. Started a traditional tech company that raised venture capital, is doing well in the mobile affiliate space. And then 2017, owned the Bitcoin, saw the other things happening. I was actually a bit of a Bitcoin maximalist, maybe more than a bit until about 2018, late 2018.
You're going to admit that on tape.
Yes. They don't want to have me anymore. So now everybody's like, you were never a Bitcoin maximalist. It's clear you're a shitcoiner. But nobody will have me. The maxis, the ETH heads. But bottom line is, I've always tried to stay curious. So in early 2018, when I wanted to enter crypto full time, because I just saw how dynamic it was, I saw just an incredible explosion of some of the best entrepreneurs moving into the space. I decided to move in, start the block, because every question I'd ask, and I'm not an engineer, every question I'd ask, I'd have 10 more questions. I couldn't answer them myself. And I realized no individual could. So wanted to bring together a team that could create these answers and help onboard more folks into the crypto ecosystem. So we raised a little bit of money, and then we proceeded to go directly into a brutal bear market. And so instead of the vision of the block being a great
startup life, people make it really glamorous. It's actually fucking shit. Most of the time, you're just terrified.
Exactly. Like today, with it's like every day there's another adventure. So basically, what we end up doing is going pure, institutional, and developed a really healthy business. It just wasn't my passion, selling research, information, media. It's a noble one, and it's fantastic. It's a great business. So sold it last year to the team, and they're doing an incredible job. Over 100 employees. I'm sure you intersect with that team, and they're really, really wonderful. So I'm really proud of what they've built, and that I was able to recruit in such a great group of folks. But that was my introduction. I met so many people. It's just a wonderful thing. I mean, in the same way that you do, as you build an incredible platform, and it's positioned me really fortunately to know, who's doing what interesting things globally. And you can literally,
it's so privileged to be the epicenter of media in this space, because you get to see and talk to everybody.
Exactly. And we made a choice, the block, to basically, integrate the media and journalism piece with research, which therefore sort of negates your ability to invest as an entity. Whereas I've seen some other really amazing models, Delphi Digital probably standing out in that regard, where they were able to use their research to then start working with projects on tokenomics, and developed incredible expertise through the team, and now are sort of giants of investing, in addition to providing great research and counsel. Just different models. But my inclination was that I wanted to go that route and start to actually really get my hands dirty with teams versus just researching and reporting on them. And so that's how I ended up becoming one of these, evil Web3 VCs, as Jack has lately been, talking about. And obviously, I've casually known Jack for a number of years and his team, and have great respect for him. And I, understand some of the themes that he's talking about and the motivations behind some of his comments, even if they're a little punchy right now.
And then another person who intersected both our lives, Chad Cascarilla, and Emil Woods, obviously passed your way. They were the people who got me into Bitcoin back in 2012, 13. So,
geniuses. So, basically saw around corners, I think, far earlier than any of us. We're amongst a handful of maybe a few hundred at most, a couple thousand people who did. And, not only, invested their time to learn, be curious, participate in the network, and stuck with it. The beauty of what they've...
I bought Bitcoin on Itbit back in 2013.
Exactly. So, and they're real entrepreneurs, right? So they went through 4 iterations of Itbit to Paxos. Some of the most amazing people in the ecosystem have been through that organization. And, now it's scaling into a crypto infrastructure provider across all asset classes, right? From cash, meaning stablecoins, to pure crypto, to securities, to commodities, that I think is going to make an incredibly meaningful difference in the world. So, Chad, not only, and Emil, seeing it early, but then sticking with it and staying so principled and continue to build. It's amazing.
Yeah, I've got Chad coming on soon, actually. I haven't caught up with him for a while. But before we dig into VC and the future and what's going on, let's talk about stablecoins for a bit.
Yeah.
How do you see the landscape developing there?
Yeah, so the concern I think that a lot of folks have is that stablecoins today, in the current regulatory environment, become, potentially, as they grow, particularly as you see Tether grow, as you see USDC grow, Paxos issued stablecoins grow, that they become these systemic risk and choke points, for regulators to sort of turn off on ramps and off ramps. So I look at them a little bit differently in that I actually think stablecoins that are regulated give us the ability to get something that looks like crypto and runs on public networks into hundreds of millions and potentially billions of wallets.
I agree.
And I think that outweighs
everything.
Precisely. Once you've the flow is on ramp, via regulated stablecoin into regulated, app like a PayPal or a Facebook Novi. And then from there, they're all enabling transfers, and you'll have the ability to transfer out to a self-custodial wallet. And to me, that's the most likely on-ramp for the rest of the world and helps. I think stablecoins help turn crypto from something that's purely an institutional playground today and something that, frankly, even people like me who don't come from a markets background don't fully grok, to something that makes sense in everyday lives. International payments, remittances that are always on, low fee, and pegged to a stable currency. So I think they're really positive, but I understand the fears that, we're hearing a lot of hawkish comments out of the, predominantly Democratic, administration in the United States. There's some concerns around China's CBDC being, not a real stablecoin, like more of a surveillance currency. And so I think it's important, in fact, more than I think, it's critically important that we see, whether it be algorithmic, whether it be over collateralized, whether it be under collateralized with other models, stablecoins come into existence that are outside of, full regulation and state control. And there's a healthy market for those developing. I can say that I'm probably not the expert who should talk to you about, how the actual economics of those work. And historically, they've been risky and have not, most of them over the past 3, 4, 5 years haven't held their peg consistently. So they're still sort of almost risk assets for speculators. At the same time, I think, models like Terra's UST show some potential emergent promise towards moving towards, vibrant, decentralized ecosystems that have a stable coin at the core of how the network and the ecosystem operates. I think that's important. So that's exciting. And then, I think we're going to have a world with more than one stablecoin issuer of USD stablecoin issuer of size. Right now, USDC is significantly the leader. I think that'll change again as we get past institutional use cases to payments, remittances, et cetera. So extremely important to onboarding, something people understand. And hopefully our goal should always be to get folks to eventually move from those custodial wallets into safe, self-custody wallets.
Yeah. And I think, I've always said the same thing. This is all good. It's onboarding. I don't get the surveillance thing. They can find any single payment in your bank account, every credit card payment you've ever made. How much do you actually pay in cash? Yeah, it's to your weed dealer. I mean, it's not relevant.
Totally.
So I don't think that is I think it's a red herring generally. I understand people's concerns over privacy. We sold our privacy to Google 15 years ago, and we're never getting it back. Well, Web3 might change that.
It has a possibility. I mean, there's been a funny sort of joke going around about DSO, which used to be like BitClout was their first application, and now they're launching another one with an app that has sign in with Google. That's not Web3, and I think we really need to create, and I saw it over the last 24 hours, folks pushing back on that. We really have a great opportunity to create new norms and not take shortcuts that basically completely undermine the ethos of what we're doing of self-sovereign identity by saying, hey, I think we can give folks more credit for if we provide elegant onboard that doesn't have them authenticate with Google and centralized intermediaries, that they will do so. And there are folks like Rainbow Wallet and Argent and many others, Zengo, who do that in an elegant way.
I also think, again, everybody pushes back, but I think everyone's missing the big picture. I think Facebook Novi is really important, and the whole stablecoin. Now they partnered with Paxos on that. This is a big deal. That's the biggest network that exists on Earth.
Yeah. So, clearly that isn't the cyberpunk's vision of ultimately what cryptocurrency is. But what it is this is truly a 10x improvement, in my opinion, over having closed balances that never leave a wallet. Like, for example, if you hold crypto today in Robinhood, even in PayPal today, it's it's there. It's not yours. You don't hold the keys to it. You can't move it. So, Novi and others, moving in that direction in the coming years is just a 10x improvement over having these stored balances that are only, useful within their network. And I think you're going to see a market evolve, and there's going to be competition around these stable coins as well. So the incentives will be, PayPal is going to want to have, their branded stable coin out in the market, just as USDC, Coinbase wants theirs. And I think having a few options at least creates a competitive market. And again, these are riding on public blockchains, and they're instantaneously and easily transferable into truly decentralized cryptocurrencies like ETH, like Solana, et cetera.
So do you think, therefore, the Fed coin, let's call it that for now, is an institutional asset and they allow the private sector? Or do they become the on-ramps to the private sector, so control the stablecoin providers, make sure it's compliant with what they need? How does that integration work? Because it's not clear yet.
I think you just summed it up. It's not clear yet, and it's purely a theoretical exercise to try to even speculate on what FedCoin ultimately would look like. I mean, candidly, we're going to have a different administration by the time that ever, makes it out into reality. We're at the period of, fairly somewhat informed, kind of economic research into this. But it's certainly heavily skewed by early thought leaders who, folks like Rohan Gray, who are sort of maybe anti open cryptocurrencies. But on the other side, certainly people who are huge proponents and have a huge vested interest in existing cryptocurrency. So I guess suffice to say, I don't know. Like, I don't know if a US CBDC is going to be ultimately, distributed out through the existing banking system. I don't know if a different model will exist where you'll have new infrastructure providers like PayPal and, and Paxos and others who, take the role that in the past, banks that faced the Fed have played. It's really unclear if there's going to be new licensing and new types of bank licenses available, for new issuers of these CBDCs. But the way I see it breaking down practically is, on a day-to-day basis, I don't really mind, and you probably don't either. Most people, a dollar converted into a digital dollar that I use to pay for my coffee, that's extremely different than and I hope it remains different, meaning maybe these privately issued stable coins that are fully backed, have incredible scrutiny and are regulated, but are on-ramps to true crypto, and Web3 applications. I kind of hope and think there's a good chance the majority of the economy operates, via CBDC and perhaps traditional currency, paper currency, until it's phased out over decades. But then over here, you have this entire, really compelling, interesting economy that develops that you can, once you're in, you actually don't need to leave it. You can play games, you can use applications. The currencies are globally available. There's enough folks on the other side of it who will accept it as payments. I think that's what's going to happen. Then the question is just how is that, how are I think the most important thing is just what's the taxation around that and how does the government get its cut of it? I just don't think you could ever put the genie back in the bottle and imply that, that world is going to run with CBDCs as the underlying, reserve currency.
No. And, I've always called it a parallel financial universe that's being built, but it's not parallel at all, actually. They converge. And as you say, everybody's moving to digital rails. And in the end, the whole thing will become one, and there'll be different ways of accessing it for different use cases. And I think that's great. I mean, I love the fact that it's coming at the same time they're building it. What's really interesting to me is I never thought I'd say these words, but the ECB might be faster than the Fed in doing this.
It certainly seems that way. I think they might have some more urgent reasons for that as well. Just given maybe the relative strength of the euro, et cetera. But it'll be very interesting to watch.
And they've got a broken banking sector. So for them, they get the ability to give stimulus to people in their hands and not let it get stuck in the banks.
Yep, that's exactly right. Whereas, the U.S. can sort of, I think some people feel like it's risky, but I just don't see, China's CBDC leaking over into, real trade in places where, China's currency hasn't existed in trade. I could be wrong. It probably will grow to some extent, but it's not going to grow to, 30, 40% of the world's reserve currency, in my opinion. And so the US, has that option to sit back, almost like Apple, watch innovation happen, and then at the right time, push forward in a really well thought out, comprehensive way their CBDC solution. The US does not need to be a first mover here.
No, dead right. So let's move on a bit to VC and kind of the future, how you see it. I mean, there is I think I officially use the word shit ton going on, right? It's almost impossible. I just want to see how you're framing it in your mind, where the opportunities lie, what's getting exciting for you, where you're deploying capital. Interesting stuff you're seeing, because there is a lot going on, as you said. Absolutely.
So, and you mean specifically within crypto?
Yeah, specifically within crypto to start with, and we can talk about other stuff if there's anything else that interests you.
Yeah, absolutely. So the trends. Basically, if you look at any Q4 report in the block or other places, the amount of capital that flowed into the space was actually deployed. The amount of capital that was raised by folks like A16Z, Paradigm, and a bunch of other folks like ourselves, reached all-time highs. So, there's capital that is coming into the market. There's demand, to put capital to work in Web3 and pure crypto trading and infrastructure, in things like Bitcoin mining, et cetera. So there's no shortage of capital, and there's an increasing number of entrepreneurs pouring into the space, both folks coming up in their late teens, early 20s, who are just sort of skipping over traditional tech and coming straight into the crypto/Web3 ecosystem, as well as folks moving from other industries and moving from tech. Now, that migration happens, call it every decade. Originally, it was like Web 1 over to Google, and Facebook, et cetera. It was from folks, doing traditional stuff into mobile. And, the next big, and cloud was a big shift from, moving from Cisco to sort of cloud businesses. What we're now seeing is that shift to crypto. So you've got money flows and you've got people flows into the crypto and Web3 ecosystem. What that obviously has led to, and I think you're seeing it over the past 45 days or so in the markets, is probably an exuberance in prices of, for example, many newly issued assets in the crypto space and tokens trading at astronomical, fully diluted network valuations before products have even reached the market, never mind reached maturity. But that being said, the amount of building that's happening is truly incredible. And so the way that I see sort of the market breaking out is, there's not a tremendous amount of like VC investment right now, let's say into Bitcoin specifically, right? It's a very stable, large, established network. We generally know like what it's going to be doing for a decent period of time. It's digital gold. You can certainly allocate, with the ability maybe if Lightning Network scales to have, money movement and payments, but it's not something that I see a tremendous number of like early risk capitalists, putting money to work. And frankly, that community has actually rejected, and some of the really interesting experiments happening, things like, what Blockstack has done with blocks and trying to build almost like a quote unquote layer 2 on top of Bitcoin. They get a lot of heat from the early Bitcoiner community around that. But some interesting things are being built there. There's just not as much money going there as there are to other blockchains. So Ethereum is the next ecosystem. Clearly a lot of work there still happening at the protocol layer as we move towards the merge, moving from proof of work to proof of stake, trying to scale because it's just been painful to try to do anything as a normal human on the Ethereum network over the last 6 to 7 months since the summer. As we've seen an explosion of applications on top of Ethereum. Now that's exciting. Like you definitely want to be investing and building in a space that's so crowded that there's almost no room. So then it's like it bursts. And then, basically how do we then grow that? And Ethereum is growing through, rollups, things like our Arbitrum, through layer 2s or side chains like Polygon, and it, but there's a lot of work to be done to make it easy to use. And so, I feel comfortable putting money to work in the Ethereum application ecosystem and have confidence that we'll find ways to, scale throughput. But more than that, we need to find ways to make it easy for people to move, from native ETH to Polygon, to Arbitrum. And so there are a bunch of projects working on that type. So that's the type of infrastructure that we're investing in at the early stage that I find
that
very
connectivity layer to pull all these things together. So it's a seamless experience.
Exactly. And so, many VCs have invested in the infrastructure, like the actual, like again, Arbitrum and Starkware and others who are actually helping directly with scaling. And because I've only been investing in the space for about 15 months, we've just looked more at those are scaling and at later stage, and we're an early stage VC. I can talk about this, but again, tons of money being put into those scaling solutions on Ethereum. The next category, so you have Bitcoin, you've got Ethereum and the Ethereum ecosystem. And again, I'm just summarizing and oversimplifying a bit, but the next are these other layer ones. So, there's some phenomenal podcasts that Suzu has done with Hasu on Uncommon Core, just talking, and many folks have talked about this, but the demand on Ethereum, Kyle Samani's talked about it, a big Solana supporter and early investor, is now spilling over to other layer ones. And this is natural. And so, so Solana is an ecosystem that, we made 65 investments last year, and out of the last 35, I think 20 plus were Solana infrastructure and application investments. So things like play to earn gaming, NFT marketplaces, infrastructure that allows people to build applications, infrastructure that allows people to build DAOs. And so Solana looks like, with the developer flows, a very, very credible layer one alternative to the Ethereum ecosystem. But it's not going to make the Ethereum ecosystem go away. There are different things, different beasts. Ethereum is robust, has been around longer. Many would argue that it's more credibly decentralized than Solana, but there are advantages to the throughput that Solana can offer. And there's
it's that triangle of
the trilemma,
security,
right?
Security, speed, and cost, right?
Exactly.
You can't get around it.
You can't, exactly. Yes. So, and there are other layer ones, right? Near Protocol, Polkadot, Avalanche, and Terra. And so there have been and many others. I'm not leaving any out intentionally, but it's exciting to see. And what we've seen is that the applications themselves have been building across multiple chains now, because there's demand, for example, for Aave's borrow lend protocol, not only on Ethereum, but on Avalanche and other layer ones. So that's been exciting to see. I think what we're looking at is a world where applications, some, not all, it depends on what the ultimate architecture and purpose is, can run across chains. I think that'll be difficult, for example, for a play to earn game that requires significant rendering and things like that. But for things
interoperability, I guess, is one of the big themes.
It's a big theme, yeah, and exactly. So that's been exciting, and then we've been looking really at where are the best entrepreneurs, what applications are they building, and so our fund is specifically dedicated. So we're assuming investors have today pretty comfortable allocations and or will put those on. They don't need a venture capitalist to do this for them, into Bitcoin, into ETH, into, blue chip DeFi. And there are funds that do this on a liquid basis too, many hedge funds that do it, these other layer ones. But
even I've started a fund of hedge funds.
I love it. I think it's a great business. I know a few folks doing that, and it's important because it's really hard for the average person to choose. You need a level of expertise. You need a team that's doing this day in and day out to identify who are the best choosers and who has the best access. So where we're focused is on Web3. I know it's a bit of a buzzword, but what it means to us is effectively, rebuilding the network, the internet, with a set of networks where participants can collectively own, coordinate and govern the networks. And that typically happens, through some, token that has different properties depending on what the network is trying to accomplish, from specific utility to governance to other, mechanisms. Some have fee capture, some don't today. And so those types of things, the categories that we're investing in Web3, and the reason we're doing it is it's hard to get exposure to those directly today. is, category one is sort of gaming and metaverse. So it would be play to earn gaming, Axie being the poster child. Metaverse, Sandbox would be one, being the poster child. Sandbox today isn't a game, Axie today isn't a metaverse. And then you have some where you get sort of game and a metaverse in the same box. There's some that are just emerging today, like a Star Atlas or a Wilder World, which will be, getting to scale and live in 2022. But the best ones take time to build and don't fully exist yet. So it's been interesting to watch that market develop and to see the valuations, given the state of, I'm not saying those entities specifically, but just in general, the market. So it's really important to invest early. And that's what we do, try to get into the first one or two rounds. The other thing that you'll see, by the way, in the market, and I'll get to the other categories of Web3 we're interested in, you'll find that, so these protocols and projects raise typically many fewer rounds than a traditional equity company. So it's like there's a seed or a pre-seed. You basically have 1, 2, or 3 quick succession rounds, probably in less than a year or 18 months. And then boom, the token's live and available to the public. Okay. So you see less dilution if you're able to, basically get into the deals and support the entrepreneurs from the earliest stages. And that's part of, by the way, the reason some of these prices have been higher than traditional equity deals. You also have liquidity sooner in many cases, even though they have many of these deals 2 to 4 year vesting schedules. So very interesting crypto versus traditional VC dynamics. The second category we invest in addition to gaming and metaverse is Web3 networks themselves. The joke would be, Crypto Cobain has been talking about like Uber, Web3 Uber. I use that as the silliest example, but there are people working on things like that, Web3 Airbnb, Web3 social networks, where again, stakeholders can participate and be incentivized via tokens. I'm not saying all of these are good ideas, but just this is where there's some experimentation happening. And then DAOs. So there actually are consumer and business facing DAOs doing things like investments. I started one myself with a group of folks called LinksDAO, where we'd like to create an online community of golf enthusiasts and then actually purchase, separately physical clubs in the real world that the DAO can sort of govern a significant portion of how that what the club rules are, what the membership rules are, the culture, and a lot more. So, DAOs is the last, and the last bucket is infrastructure to support this. So as we were talking about interoperability today, it's really difficult for, my dad or, the average person who hasn't spent time outside of their centralized exchange account to actually use crypto. And so we're investing in things that make it easier for people to use crypto. It could be, a wallet like Rainbow that's really easy to set up. It could be, things that help with these cross-chain swaps in a really elegant and easy way and abstract away a bit of the complexity. So just spending a lot of time looking at infrastructure there. It could be developer infrastructure as well.
Yeah, I mean, there is so much going on in this whole Web3, and we don't know what it means. For me, it's something to do with a community owning part of the community, whatever that is, whatever that means. I think we'll see literally hundreds of applications. I was speaking to a guy earlier who's writing a book or a screenplay about NFTs by issuing NFTs.
I mean, love it. Which project is that? I think I heard about this. Is it Neil Strauss or is that another one? There's a couple.
This is Ben who
Ben Mesrick.
Ben.
Yeah.
He wrote The Social Network.
So cool.
And he writes for Billions and he does all sorts of amazing stuff. And he's funding it via NFTs, getting a community behind the project, building it from the bottoms up. I like the fact that people kind of know what they're getting. Some of the things like Friends with Benefits, also interesting, but you don't kind of know what you're getting.
Or what the entity is, right?
That's right.
Yeah.
It's really clear that what he's about to do, and I'm not even sure he yet realizes it, but he's about to upend the entire publishing industry and the entire movie industry in the same thing because of the power of community. I just love this stuff.
No, and a couple of my friends actually participated in that project with him. And it blows my mind. It's so participatory. You're building the community interest as you go. Again, same theme that we're doing with LinksDAO. We now have 13,000 Discord members, 5,000 NFT holders who care about, a golf and leisure course or a network of them globally. Whereas historically, you'd basically go spend $20 million on a plot of land somewhere, purchase it before you even knew if there were going to be demand for that thing. It's just so exciting to be able to build the community, get the enthusiasm, show and demonstrate, what your ethos is and the promises. And people have, I think we've undersold the imagination. We see a lot of snarkiness and doubt in whether it be mainstream media, whether it be in some Twitter comments, but there is enough interest, emergent, really exciting interest for people to participate, spend time, and frankly learn. And that's what's been so exciting. We kind of have, I think, a golden era of imagination right now, and it's incumbent upon all of us to kind of deliver. So to put the capital to work into projects that are actually meaningful, put social norms around people who sort of rug and run off and sort of take the money and run, because there's going to be some of that, and so it's going to be a very interesting year, and really probably the most critical in terms of migrating crypto from an insular financial markets only ecosystem to one that the masses are becoming aware of and actually using.
Yeah, the DAO structure, jury's still out for me. For some things, it works brilliantly well. And other, people are like, we want to form a DAO, we want to do this. And I'm like, okay, well, can you ever sell your business ever again? Can you actually realize the capital that you have in your business? Well, I don't know. I'm like, well, you need to check this kind of stuff.
It's a great question. So basically what we've done with LinksDAO, and again, it's very early and emergent, and we're exploring effectively how to affiliate the two, both a DAO and then a corporate structure to actually acquire the asset and operate the asset. How is it possible to use a DAO to accomplish all of the objectives, a treasury to basically create an online world community, game, club, rules, norms, and access to a physical, club. But frankly, to your point, make the governance work in a way that doesn't sort of turn progress into molasses, where you're just stuck in this endless cycle of like voting on things and never coming to resolution. It's a grand experiment, far from guaranteed to work. The advantage is you get this like rabidly excited community that has resources to apply energy and financial grants and things of that against experiments, but you also are definitely slowed down by not having a focused, centralized, call it 10-person executive team.
A good friend of mine, he was part of an advertising agency, a really trendy advertising agency in the 90s in the UK. And what they thought they'd do was the right thing, which was like, we're going to give everybody who works for the company an equal vote, and we're going to be this democratic, amazing new business that's not driven by the powers that be. What it ended up was there was an M&A thing, and I think it was the lady who made and served the tea in the afternoons held up the vote, and they had to dissolve the company.
Oh my goodness, I'm laughing.
Because they could not make decisions anymore because everybody had vested interests. Yep. It was a really weird setup. So there's going to be a lot of experimentation that needs to happen to figure it out.
Yep. And then these are really exciting, fun experiments around, like that one, like you're never going to get to unanimity amongst, again, 5,000 holders in our case. So, what voting threshold do you need to make the varying degrees of decisions? And it's unclear. All I can say is we're building lots of tooling. I mean, not me alone, meaning the ecosystem is building a lot of tooling around how do we communicate? How do we make proposals? How do we organize into guilds of specialists? How do we vote and record the votes? And then how do we actually act? We have treasury management tools. You could look at it and say, well, we're just reinventing the corporation. I'm more optimistic than that, and really think that with the transparency and the community tools that we have, people are participating and are going to be more active. That being said, to date, as you think about DAOs primarily, they haven't, most DeFi, for example, are sort of DAOs in a sense, and they're heavily concentrated with VCs having a significant portion of the vote. That's the thing I think moving forward. VCs and really large holders moving forward, we need to move. And Jack Dorsey has pointed this out, to a more decentralized and distributed voting structure for these things.
I think that's a maturity issue, right? It's the same with shareholding. Right now, Elon Musk owns most of Tesla still, and a lot of SpaceX, but over time it gets distributed amongst a broader base, and then it's very different. So I don't really have a problem with it, because without the entrepreneur making decisions or a few key people, you don't get anywhere.
So I'm in the same boat, and I think what's good is people like me and others are saying, hey, we recognize, by the way, the shortcomings of today. I think everybody's a lot of people have moved from a defensive posture to we realize the shortcomings, and it's on us to actually deliver the promise that we think exists. And I'm extremely optimistic. I mean, I think if you look at people who have had emergent positive ideas that used crypto networks and tokens and assets over the past 12 years since Bitcoin was invented, the long arc of history shows that you're seeing a lot more progress than, a significant amount more than the skeptics would have you believe could have been possible.
How are you looking at the other thing that's, NFTs have gone mainstream, but they've only just started. As we're talking about now funding books from creating NFTs. There's a lot. And social tokens. Those are the two things that I think are really mainstream. How are you thinking through any of that?
Yeah, so social tokens, I think, are a little bit early. I worry that we might be getting ahead of ourselves with that. And by social tokens, I think you mean more sort of like, do you mean ones like around like individuals and the communities that they own? Yeah, I think
communities, whether it's brands, music artists, sports teams, where there's fandom and a community that wants to participate and network with each other, essentially.
So I love the experiments. I've seen some of them work in a really fun way, like Socios tokens that exist within sports teams. They're a positive thing. I just don't know. So those are fun and give governance rights over certain things. But I don't think we've found like the killer app. And I think people are starting to experiment. You see Royal in music, where you can kind of like, I think it'll become much more exciting. And this is what we're striving for with LinksDAO, is over time, I think something like Royal, where you own the rights, like the actual financial asset, the IP of the music, that's exciting. So, as these social tokens.
I had Justin on last Friday. It was interesting.
Yeah, I mean, he and that team, they're brilliant, and he's just a total pioneer. I think Nas, right, is doing their first, he's done one, but they're doing a drop of some Nas music, which is just so exciting. So social tokens is just like, hey, this somehow tracks the popularity of the individual. I don't get that excited about. What I get excited about is giving fans the ability to have a vested interest in the success of artists that they identify. The challenge is just, it's a little murky what you can do with tokens from a regulatory perspective in the US. What I'm excited by is that so many people are sort of pushing the envelope. And I wouldn't say I would encourage people to ask for forgiveness, not permission, but I do think that right now I feel a healthy ecosystem of willing, fans and willing, call it celebrities or people with communities, doing light testing. And so I'm excited about that. I'd love to see, by the way, the US regulatory bodies give sort of they never will. They litigate.
They're not even close to making a decision.
No.
They haven't even made a decision about bloody XRP and Ethereum, let alone.
I know. We're seeing them backtracking on Ethereum today, right? I think I read some comments from Gensler this morning. So, yeah, unfortunately, we have sort of a culture of enforcement, not through rulemaking, but through litigation. But the good news is, and I think what's happening is we're seeing so many people experiment doing really reasonable, non-scammy things. This is different than Floyd Mayweather, pumping a token ICO 3 years ago. This is artists actually giving true IP to, the fans. And so that's sort of what's exciting about social tokens. With NFTs, I love how they've started to capture the imagination of folks around things they already love to do. NFT-based gaming, where I can now actually own the asset versus spend, 6 hours playing Fortnite or another game. And, it all just sort of stays in the economy. I can actually acquire these assets that can be used outside of the game. I know not everybody loves it, but it's attractive to enough people that we're seeing success there. NFTs that are collectibles like NBA Top Shot. It was way more fun to collect Top Shot moments than it was to collect your Topps baseball card. I started collecting them and I hadn't collected in 30 years. This is what got me into NFTs. As you see more of this, you get more folks excited and they start creating wallets. Tom Brady's autograph is another example. And you've just seen the explosion of usage of OpenSea. And what's cool is that, it's not, so there's so many categories now. There's collectibles, there's genuine art, there's generative art. And then there's these PFP projects that are creating some really fun, dynamic communities that again, you can sort of scoff at any individual one, but you see a lot of really passionate people identifying with specific ones. And I love to see kind of the financial value tied to people's belief in the community. And I think these, again, it's emergent. It looks like a toy, to use like Chris Dixon's "everything starts out looking like a toy" famous phrase, but it's going to have meaningful impacts as we move towards, for example, NFTs as digital identity, NFTs as passports that display your on-chain activity. We invested in a company called POAP, Proof of Attendance Protocol, that shows things that you've gone to that can give some credibility. It's like the stickers that you used to put on your like backpack or your car or whatever to show like what tribes you're a part of. This is fun, and I think it starts to go from fun to meaningful in the coming years.
The big thing for me is the wallet. I mean, it's still not a great experience.
I mean,
even I was setting up my Rainbow wallet and I just kind of gave up. I just got a bit bored of trying to set it up. And it's like, and then there's if somebody gives you an NFT that's on Solana and you've got a wallet that's an Ethereum wallet, it's just so everything is difficult.
I can tell you that the greatest entrepreneurs in the world. I mean, we're small investors in Rainbow. It's an incredible team. I would say give Mike and team that feedback, and they're extremely rapidly respond. Tweet at him. He's a lot of fun on Twitter as well. But look, I think you're right in some respects. I think it's also challenging for people. There's always this fear, like, am I being secure enough when I set something up? And I think that is going to be a turnoff for folks who are maybe pretty informed, but maybe like not completely up to speed. And that's pretty much everybody. That's not an insult. That's like very sophisticated technologists who haven't had to think about self-custody.
We're all terrified. We're all terrified. Every time we transfer an asset, we put the bloody link in and we're like, did I get it right?
Still, I mean, when we send stablecoin for investments, you send $1, before you send the full transaction, just to make sure that you have the addresses right. So, I would love it if we could see just basic things like that be automated, so that you could send a test transaction. If it works, the next one goes through. Like, those are, I'm just using that as a simple example of things that will get easier. But yeah, we're so early in terms of UI UX. The beautiful thing again is there's Bobby Goodlatte, for example, somebody who has worked in design early at Facebook and a bunch of other companies. He now has a firm called Form Capital, and he's investing in crypto, in Web3, among other things. But he brings really high caliber Web2, best in the world design expertise, and is a functional VC. So that's a trend, by the way, you asked about VC, that I love. Functional VCs who have that expertise. For me, my functional expertise is community building, PR, comms, marketing. And as you look at, by the way, I never answered this earlier, how these rounds are being composed in crypto, they're often syndicates where you're looking for a group of folks. Maybe you look at a Delphi Digital who has experience in tokenomics, and Animoca who has deep experience in gaming, Bobby who has some experience in design, angels who have experience in go-to-market.
Yeah, because money's not enough anymore.
Not even close.
You need to help the community, essentially. If not, you're not valued.
Yeah, you have to love it. Like, I spend so much of my day in Telegram groups and other chats with the investors that I'm investing alongside and the entrepreneurs themselves. And they turn into these really vibrant communities. They spill over. Many of these projects, they start with dozens of people, and then, maybe a quarter of them go off and start working on an offshoot project, but it still has ties back to the original one. It's just really awesome to see. And I'm excited to see that start to spill over, by the way, into, how we think about like some of these growth stage and more scaled companies. By the way, this is what's so exciting about crypto is these projects, these kind of like DAOs or emergent projects that don't look like corporations, that don't have like non-competes and try and keep people in one place. Like LinksDAO. I'm working on it as non-executive chairman. It's a part-time thing. Many of the leadership are, of the incorporation are in the same role, in the same place. And then you have a few full-time folks who are deep stewards of where that project goes. And I think that's the future of the world. So it's sort of asset light, people moving in and out, lots of contractors, contributors, and then communities that ultimately drive the shape of what those brands deliver.
Mike, it's a fascinating world. Everybody's having fun. I say this a lot these days. They're all exhausted. I mean, keeping on top of all of this stuff is a nightmare, right? Telegram, WhatsApp, Twitter, Discord, everything. It's like
I had to turn off 8 different communications methods, I think, before we started this podcast, just so I wouldn't get any notifications.
I mean, it's too much, right? But
it is.
But it's fun.
We have to fix that, by the way. I'll invest in whoever has the best.
Who can put it all in one place.
Exactly.
Brilliant. Mike, listen, thank you. Really enjoyed our chat.
I did too.
I'll definitely touch base with you again to hear what's going, because you seem to be always at the epicenter of everything. So I'm just going to touch base with you.
All right. I appreciate it. Likewise, Raoul. Just an absolute pleasure. Thank you.
I appreciate it. See you soon.
All right. Cheers, brother.